Well, hello everybody. Blair Nightingale here. Market Monday, 6 p.m. We do this every week. Although I will say, I feel like it's been a few weeks. Very, 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 very busy here at Tradeway with our students, man. We got a lot of stuff going on. We are teaching classes every day. We are all over the country. We got big events going on. There's just a lot going on. So I am happy to be here with you guys tonight. We give you a one-stop shop. Come in, whether you're brand new, newer than brand new, or you've been around for a little while actively learning to trade. This is a place where we get to come on Monday night, start of the week, get a look at what's going on in the stock market. I heard a pastor say yesterday at church, wasn't teaching on the stock market. That wasn't his purpose. It wasn't his goal. He said, none of us really know what's going to happen. We don't know if the stock market's going to go up. We don't know if the stock market's going to go down. And he said it in a way, and people chuckled that, it's just one of those things. You just can't know. And you know what? He's actually right. You can't know. You can't actually know what the stock market is going to do. There's no way we can guess. We could guess, but that's all it would be. And as I've said on here many times, it's never guessing, gambling, or going for it. If you know anything about the skill set of trading, it's more about limiting your activity to great opportunities and playing the numbers over time. The question is, how do we do that? But what this pastor didn't realize, even though he got the first part of it correct, he can't know for sure if it's going to go up or if it's going to go down. What you can know is what you and I are going to do about it, right? And this is the part that we have the opportunity to claim some power when it comes to the stock market. The power in knowing what it's going to do for certain. It's a pipe dream. It can't happen. It doesn't work that way. For those of you who have been trading a bit, or you know a little bit about trading, there are trading systems, there's technical, fundamental, there's different probabilistic, there's different ways to get into trading, there's different time frames, there's different edges, there's different things that you can learn to do. But number one, we have to learn that there really is a skill set here we can learn to do. And it's not just for the elite on Wall Street. But even as we do learn a skill, it's not about knowing the future. It's about knowing what you and I are going to do regardless of what the stock market does. It's about understanding that there are strategies that are not particularly complicated, okay? We have to learn what they are. We have to learn to manage some of the risks. Do you have to manage risks when you drive a car? Are there some risks maybe to driving a car? Of course there are. There are extreme and very plain risks. Now, is there a lot put into potentially being safe on the roads? Laws, speed limits, seatbelts, protection? Yes, there is. But do we just decide not to drive because there are risks? Blair, are you making a comparison of the stock market and cars? In one sense, absolutely I am. And I'm doing it in this sense. They both have tremendous risk, but they both also can have benefits. The stock market can have a benefit for us, but we have to learn to manage the risk. The stock market it has the potential to accelerate what we do with our money. This is why over 60% of Americans are in the stock market already. Why? Because it's the number one wealth creation vehicle for Americans' retirement. You get a job, you go, hey, are there benefits? Well, what kind of benefits? Well, 401k program. 401k program. Oh, what's that? Oh, that's investing in stocks. So one of the basic things that a lot of people will expect from a new job is, oh, you're going to give me an investment plan, right? You're going to give my money to a professional and we're going to learn, or we're going to grow over time because you're going to invest my money in the stock market. So the stock market is already there, right? Now, some of us aren't in it at all, but more people are in it than they even initially realize. And the point I'm driving at here is that we ought to learn how to use it, and we ought to learn how to use it better. Part of that is managing the risk, not knowing the future. Okay? It's not what it is. And that's actually good, because if it was knowing the future, it would only ever be guessing, gambling, and going for it. If it required that we know the future, it would require something of us that we cannot do. But that's not trading. And that's good news. That's not trading. And that is good news, because there's actually tools, skill sets that we use in our community that help folks understand exactly what they need to do. Because as I was going to say earlier, there are some fairly simple things. And I mentioned you have to learn to manage the risks. Yes, but there are fairly simple things. You and I just jump in our car and drive where we drive now. Why? Because we've learned repetitive learning, training. It's become second nature what to do. What if you could learn second nature what to do with your money? Are we emotional every time we get in the car? No, we probably were when we were learning, right? But now, second nature. That's what we want to learn how to do in the stock market as well with our money. We want to learn how to do this with our money in general. And it doesn't all have to be in the stock market, right? But we believe that the stock market is one of arguably the most powerful method for multiplication in your money, whether you're doing short-term trading or long-term investing. And if the market goes up, we know what to do. If the market crashes, tanks, goes down like 2008 and then some. I've been asking people recently, did you do really, really well in 2008? When I'm in a room full of people, right? 200, 300, however many people. I'll just say, hey, raise a hand. How many of you guys did really well in 2008? I mean, man, you just like, oh gosh. I know it was a hard season for a lot of folks, but man, me and my family, it was just the opportunity of a lifetime. Okay. I'm not getting many hands. In fact, I'm not getting any hands. So what I'm coming into this season with is going, well, we don't know what kind of a recession. We just know we're teetering on the edge of a lot of risk. The market's still going up right now, and I'm going to talk about that here in a minute as we do an update. It's trying to recover, but it's a little more feeble than a lot of people realize. I'm going to show you the reason why this rally we're in shouldn't be trusted hook, line, and sinker. There's some things that we need to look at. But if we did go down a lot, do you know what to do? Would you know what to do? Would you know how to protect your positions? Did you know you could have insurance on your positions? Blair, what do you mean by positions? I mean the stocks you own. I mean the money you've been saving. I mean the gains that you've potentially made. I mean the retirement that you've been building, that you've probably been paying somebody else to build for you. Right? Do you know how to do that? You say, well, no, I don't know how to do that. Who knows how to do that? I didn't even think that was real. In fact, maybe I don't even know if I trust you, because you're telling me that there's insurance for long-term money in the stock market, and I never heard that in my life. And if it was true, surely I would have heard it by now. But there's a lot of things that we all don't know. And the real slippery thing is that we don't know some of the things we don't know. Some things we have a general idea that we don't know. Some things we don't know that we don't know. And we exist to help you know the things you don't know, so you can grow in ways you didn't know you could grow. And it's not just a clever way to say it. It's the nature of breakthrough, right? So we want to help you do that. Now you can see on the screen here, we're looking at our charting platform here, Charts by Tradeway. And I just want to show you here, looking at the energy sector last time. The stock market is slightly pulling back today, right? Slightly pulling back down to what's going to look a lot closer here to the 5-day moving average. So I'm going to zoom this in a little bit here. And we had this nice little trend going off the 50-day right here, 50-day up into resistance, 50-day. We chopped for a bit, boom, up into resistance, 50-day again. came up into resistance, came down, and then what happened? Tech stocks really blew up in a good way, right? They took off, and that really lifts the stock market. Now, what's interesting about this rally, let's just back up again here. Here, we'll even go further than that. Nope, that's not the one. I'm just changing the time frame here, folks. That's all I'm doing. So we're looking back to here, okay? That's back to January 22 when we really started going down. But here we are, down here at about 3,500 is the low. We're up almost 800 points from that. Now it's taken a while. But it's trying to retest this high right here. So for those of you out there who are watching, around 4,300, 4,310 on the S&P 500 will be an interesting level to watch, as it's the extreme high. It's the high we have from the last, even back to here, okay, which would be May of 22. So that's quite a ways back, okay? The market's trying to get up, trying to claw into a recovery there. And we're starting to look at the market like we could really see some significant impact still come into the economy in a negative way, because it's going to take time for the Fed's interest rate policy to really work its way through the economy. As it does that, we may see more things pop up like we saw last month before, with some of the banks failing, some of the pressure on those banks. This is the thing that starts to happen when we get into recessionary times. You have cause and effect. Remember that the Fed's policy of raising rates is to slow the economy down. So the overall picture, right, the longer term economic picture will be reflected in the stock market. For those who are wondering, where are we going here, right? Overall, where are we going? Some of you guys tune in on this show because you've just got a retirement account. You don't necessarily know what to do with it, but you're looking for some insight on where it's going to go. Some of you are sitting on some cash. What am I going to do with this cash? Should I not be holding this right now with inflation and things like that? I want to deploy my cash, which of course I'm a fan of that mindset. Now, when and where, of course, is the question. When we're looking at the stock market, you say, well, if we're going to get a big crash, which, by the way, retail investors, recent polls are showing retail investors are a lot more bearish than institutional investors, which is very interesting. A lot more bearish than institutional investors. Now, that doesn't mean there's not a bearish sentiment among institutions at all. There are headwinds, but the retail people, that would be you and me, right? They tend to be more bearish. And I even read that they're more bearish right now than they were in 2008, which is interesting. That just means, it doesn't mean the price is going to do one thing or the other, except that it does mean that retail investors, right, not institutions, the pension funds, the mutual funds, the investment banks, they're expecting bearish action at a very high level, which is very interesting. So there's a lot of sentiment like, oh man, things are deteriorating and this market's got to give up the ghost at some point, right? The reason that would be a benefit for investors who are trained, traders will do whatever they need to do, whether the market goes up or down. However, a decisive move down would still be a great opportunity for traders, because what happens when the market moves down? The market moves down and it causes equity, stock prices to become cheaper. There are still great companies that may take a hit in this economic cycle. However, we anticipate a lot of those companies, they will still be around in a year, 2, 3 years. Now, you can't always know for sure, but if you take some of these big companies out there that get their stock price hacked, slashed, if the economy really tanks, right? Yes, on the one hand, there will be significant impact to Americans. And that's not something we ever hope for, push for, pray for. But we know that this is a normal part of the economic cycle. It does happen. It's just like winter comes. Sometimes in the economy, winter comes. The difference isn't that sometimes it does and sometimes it doesn't. Eventually, we always get somewhat of a recession. The government can manipulate, stimulate, do all the things that they do. And yes, they can prolong the spring. They can prolong the summer. They can do that. But eventually, there will be recessions. There will be bear market crashes. And the difference then is not that there will or won't be, but there will be people who are prepared for it, and there will be people who are not, right? This is what we need. We need to get wisdom. My people perish for lack of knowledge, and we need wisdom. Wisdom is better than gold. That's what the scripture says. So it's important that we understand what to do in these times. You can see, even though it's trying to recover, why is it really moving up right now? Right? You're saying, Blair, well, if things don't look so good, then how come the stock market's moving up? The stock market's moving up because and this is the biggest reason. Remember the S&P 500, it's got 500 stocks. Right now, you're looking at one screen, aren't you? Right? You and me, we're looking at one screen. Now, this screen is showing 500 screens in one screen, right? It's an index. It puts 500 companies, puts it all into one screen, okay? But do all 500 of those stocks have the same impact on this index? In other words, perhaps there are some stocks that are more heavily weighted. They have more influence over the index as a whole. And the answer is yes. There are some companies that have a significantly higher weight, and technology stocks, as I have talked about on here many times, have a more significant weight. So what are you seeing? Well, let's go to this chart here. Here's some of the stocks we've been following. Apple's a big company, but we're not just following Apple because it's a big company. Look at this pattern. 20-day, 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 and now we're up here. Right? 1, 2, 3, 4, 5, 6, 7 times off of the 20-day moving average. Off the floor, up to the ceiling, off the floor. Oh, Blair, but didn't you guys look at this because Apple's such a great company and today they gave out all this new information and their headset and their new M2 chip and all this kind of stuff? No, that isn't why. It's a great company. That's not immaterial. That's not that doesn't matter at all, but it's got a great pattern. And a lot of stocks in the technology sector are doing very well. The technology sector, as you can see here, took a much harder hit in 2022 than the rest of the market, than the other sectors of the S&P. And it has recovered quite nicely. You can see here, it's riding pretty strong off that 5-day moving average. What's the point? Well, if the NASDAQ, which is primarily these tech stocks, is really the reason that the S&P is even holding up and even rallying the way it is, how many stocks need to rally in tech to really lift the S&P 500 index? And if only a few stocks in the technology, right, sector were so cheap, they got so beat up last year that they're just being feverishly bought in the AI boom that's happening and all this kind of stuff, right? If that is really driving the recovery, then you could look at the screen of the S&P 500 and think, well, I guess things are going pretty well. But actually, they're calling this a skinny rally, a narrow rally. And that's a term for when actually it's just a handful of stocks that are really driving this. Now, perhaps it will create a positive sentiment and some other broader sectors will come in and start to push the rally higher, okay? And make it broader, which is more trustworthy. Because if it's really just a couple of things holding the house up, what happens if those couple of things start to falter? Well, what we thought maybe was particularly strong is not as strong as we thought it was. So I'm not buying into this rally as a whole just yet. For people who are saying, I'm sitting on some cash, should I be taking that and deploying that and buying, an index fund or some kind of ETF or perhaps a particular stock that you're looking at? I'm simply going to say tonight that I'm looking at the headwinds on the economy and I'm still going, all right, let's see what happens with gas prices over the summer and how that affects inflation. Let's see how the jobs numbers continue to show up. By the way, this last week, jobs, significantly more jobs available than were expected. It was a huge, I'm going to say, lift for the stock market on Friday, where on the heels of a debt relief deal, which we did get last week, which was also a lift for the stock market. We avoided default. Now, I think myself and many others commentary on that was I'd be really surprised if they didn't make it happen. That's a really big deal for them to not do that. They did push it pretty close to the line, but that's kind of that political game of chicken that they seem to be playing because they certainly got it done. So I feel like obviously that was an impact on the market. But for my traders out there, I know you were watching that to see what happened. But really, it was that jobs report on Friday. So that said, jobs, right? Watching jobs into the summer, watching oil into the summer to see how that affects inflation. But I have to say, and I'm going to just announce this tonight, I am adjusting a little bit. I am starting to adjust a little bit my bearishness on stocks as a whole. I'm reining that in a tiny bit. I still think, as I've taken plenty of time to explain now, I still think there's plenty of headwind. I think it still feels to me like a bit of a house of cards. It's a few stocks really driving the recovery. And we're not even up that far, guys. We're really not. We're just clawing away from the lows of last year. However, I could see with government intervention, stimulus, and the fact that there just really are so many jobs. Consumers are still spending money. They're still taking on debt and they still have jobs. As long as that's true, a big crash, I don't know, may not be so likely. What could be more likely? Potentially that the stock market just chops sideways. And if the stock market chops sideways, trust me, you're going to want to understand some of the option strategies that we have previewed here on this program in the past. Remember, you can find everything right there on YouTube because those are going to be the better ways to deploy your money in stocks if you're looking for something to be involved in the stock market when it's chopping sideways. There are options that give us options for a potential higher probability and benefit in the stock market during a time when really things just don't really go anywhere, right? We still have fairly high volatility right now. So for my traders out there, what are we really doing here? Well, we're really looking for this guy to at least come back to the 5-day moving average. You'll notice, as I said, off the 50 ceiling, 50 ceiling, 50 ceiling comes down, gets real hot. What does it do? Breaks out of the pattern. Old ceiling becomes what? New floor, right? Then it pops up today, kind of a reluctant pullback, not much to it here because tech did pretty well again. It sold off a bit later in the day. So let's see if we can get a move at least back down to the 5-day moving average. And we've just been watching things. I already showed you Apple. We've been watching patterns just like this. This is the kind of thing we're really going and looking for. When I do this chart like this, does that stock look like it's going up with no technical knowledge, with no technical ability whatsoever? You haven't learned any of the stuff, right? Imagine if that's you. If you have learned, imagine yourself in that place again. You can look at this and just go, well, okay. At one point right here, it's at $50. That's at $50. What's it at now? 104. Okay. That's got to be good. For people who buy stock, that's a good thing. This thing doubled, okay, since October of 22. Less than a year, stock has doubled. Bottom left, top right. Not so bad. Now we need to learn, well, what do I really do with that? And once again, here we have a really nice pattern. Hits the ceiling, hits the floor, moves to the ceiling. 20-day ceiling, 20-day ceiling, 20-day, 20-day, 20-day. And now here we are, coming back down again, right? This is the kind of thing. I read a report earlier today, and I'm going to finish with this tonight. The average American spends 4.5 hours a day on their phone. 4.5 hours a day on their phone. Now that's average, right? That's average. And some of what we're doing on our phones, I'd like to think, is useful, right? 4.5 hours, maybe not. That's the average. Some are more, some are less, but some are more. 4.5 hours equates to 2 months in a year, right? 2 months. In 6 years, that's an entire year on your phone. In 6 years, 2 months times 6, that's 12 months. That's a full year on our phone. Blair, that was a hard left turn. What are you talking about the phone for? I'm saying, folks, coming and spending a little bit of time investing in yourself, investing in your family, on how to manage your finances, on how to grow what you have, on how to use the stock market with maybe what you already have invested, maybe what you'd like to start investing. I just showed you 2 patterns that are the foundation of understanding how to use a good opportunity. Now, we buy stock, we buy options, we sell options, we do all kinds of stuff. You can be very conservative, you can be very aggressive. We'll teach you how to do both, right? Not everybody is the same. And sometimes you'll use one and sometimes you'll use the other. And I can tell you from my own story in 2015, starting in this program, I didn't know a thing. I didn't even know what a 401k was. That is a true story. That is a true story. So this is not just for certain people. This is for anybody who wants to learn and say, you know what, I might just borrow a little bit of the time that I might be giving away to things that do not matter, right? And say, you know what, I'm going to give a little bit of time to some things that I really want to grow in. And we hope that you'll continue to spend some time with us here at Tradeway, because we really believe this is an important thing for us to do. Just learn a little bit more, a little bit more, a little bit more, a little bit more on how to steward your finances. We don't make finances our God, but I have noticed that people who don't want to have a conversation about finances because they're afraid to make it their God, oftentimes are believers who have money as their master. It masters us. So let's talk about how we can have authority over it because we understand how to use it. That said, thank you guys for being on here today. This is an update. We're looking for what's coming in the future of the markets. A little bit, I think, of an exhortation to just say, this is actually really helpful, really important stuff. If you learn something you didn't know, you're in a brand new spot. You can do something now. You can make a decision now. You have wisdom now that you didn't have just a moment ago to think through things, to manage things, to steward things at a level that you didn't have just prior, right? I'm not just inflating it. I'm saying this is what happens when we make this kind of investment in ourselves. And we ought to do it in our finances as well, because it's a very powerful vehicle. So I appreciate you guys spending the time with me on here. Charlene is dropping in the comments from our friends over on YouTube. Thank you very much. Appreciate you. I know a lot of you guys will be watching this on recording. I know a lot of you guys, you're already in our program. You're like, Blair, you don't have to tell me. I'm already in it. I'm here. I'm doing it, right? So I'm encouraging you guys because you're in the right space. And I just feel like, we're living in an hour. If you know me, you've heard my stuff before. I want to edify believers, and we're living in an hour where we need to redeem the times. You say, Blair, does that mean the scripture is saying in that section we're supposed to learn to stock trade? No, it's saying we're supposed to redeem the times, buy back the time, impact the time, utilize the time, right? We don't have time to not be intentional. We don't have time to not be laser focused. We don't have time to not be in partnership with what we feel like the Holy Spirit is showing us in every single area of our lives. And Tradeway exists to be a resource for you in this area. so that you can go further faster with less work, just like you do in your car. Thank you guys for being on here, and we will see you next Monday night. Appreciate you. Good night.